So hi guys, welcome back. Today we're going to be looking at TTD or the trade desk, and we're going to be looking at a stock analysis on this on this company. It's trading more than 30% below its December highs. So we're going to be looking at whether this company is a buy. If you do enjoy, consider subscribing. It is free and it does help me out a ton. If not, thanks for watching anyway. Onto the video. So just before we begin, a little bit about the company. So the Trade Desk is the largest independent demand side advertising platform. It's seen amazing growth over the past few years, especially in 2020. And many investors as a whole believe that the stock has more room to grow. So the company helps brands place their ads strategically between various media forms, whether it be on a desktop or a television device, a podcast, or a mobile app such as Instagram. So it generates revenue by taking a spread of the advertising slots that it purchased on behalf of the brands that use its platform. So for example, if a company buys ad space from a media company for 85 cents, Trade Desk charges the advertisers $1 and then keeps 15 cents of profit. So for a platform such as the Trade Desk, they rely on scale. So Trade Desk is, as previously mentioned, one of the biggest companies. So one of the advantages it has is that it's already built up its ad placing platform. So over time, it will be able to collect profits without having to pay much or innovate to keep the platform running. On top of that, they've been able to collect a lot of data on demographics and preferences of the average consumer. Makes it difficult for the current advertisers who work with Trade Desk to switch platforms. So because of this, Trade Desk has built more momentum and has the fuel to continue growing into the future. So what's recently happened? So like most companies in the sector, the Trade Desk use something called third-party cookies, and that's used to track the behavior of specific users across websites, apps, and other platforms in general. So the target then is used in targeted advertising based on the company's campaigns. So regulators all around the world are demanding tighter privacy controls over how the data is used, collected, used, or shared. So recently, Google, which is one of Trade Desk's biggest users, or which the most advertisers sell to, is turning off the ability to track user data, and because of this, the Chrome, which controls more than 90% of the search in the world, will have a big effect on Trade Desk's market. But we do need to understand that because they use third-party cookies, a lot of other companies that are smaller and have less of the size that the Trade Desk has will be able to run out of business, making Trade Desk an even stronger player in the business. So when you take that tool away of third-party cookies, many buyers in online ad space will find it harder to make most of their digital ad spending, and then they will turn to specialists such as the Trade Desk, who have experience, expertise, and more tools to get the job done. So Trade Desk will actually be able to get more customers as a whole, even if they might be selling less products individually. So catalyst for futures growth. So the first significant catalyst for this Trade Desk is an increase in CTV advertisements. So COVID sped up the adoption of connected television in a major way. So the Trade Desk survey recently shows that more than 27% of US households plan to cut their cable in 2021. So this is a strong incentive for many brands to stop advertising on TV and adapt more CTV platforms sooner rather than later. So another catalyst is that the Trade Desk recently announced their partnership with Walmart to launch an extended and expanded version of Walmart Connect, which helps brand reach Walmart customers and run through its ads on their store TVs or checkout screens. So 90% of Americans shop at Walmart, and the stores welcome more than 150 million weekly visitors, and there are over 170,000 TV wall and self-checkout screens. So with Trade Desk combining with Walmart, it will significantly impact both companies' revenue in a positive way. The next thing we're going to be looking at is the financials of Trade Desk. You may see that this company only recently started posting things by around 2014, 2015. Don't be worried, it was listed at the stock market quite later, around this time. So the net income over time has been increasing, so that's good. So has the earnings per share, quite significantly, I may add. The operating cash flow, cap spending, and free cash flow all increasing. So more money is coming into the company, more money is staying in the company, and more money is going out of the company as well. So that's really good. Its book value per share consistently increasing, not to a point where it's an asset company, but still good to see that the company is acquiring more assets. The net margin increasing over time, has a very healthy net margin of 29 as of right now. The same can be said about return on equity. It has a return on equity of almost 30%, which is very healthy. Its interest coverage was very high a few years ago, but after that they didn't pay interest coverage anymore, and their debt as a whole is quite conservative, only having 0.25 debt to equity ratio, which means that their equity clearly covers their debt. So we're going to be looking at a technical analysis on this. We can see that Trade Desk really shot up in 2020, starting from about $120 by the end of March, shooting up all the way to 960, coming down to about 640, and now trading at 724. So if you look at it, the stock price, if you would, the best place to invest in this company would have been about a week ago, when the stock price was about 640 and it rebounded off the 200-day simple moving average. But as of right now, I would still say that the stock is trading at quite a good price, especially being below the 50 and 20-day simple moving averages, but still not being on a downtrend. So I think currently is a good place to enter the market if you're looking to invest in this company. So just some final words. This is a strong company with good future growth, and is trading at a pretty solid buy price right now, and has amazing financials to carry it in the future. So if you do choose to invest, make sure to do your due diligence, and thanks for watching. Bye.